Like the way retail is getting into crypto, this cycle is going to look completely different from what we've seen in previous cycles. The amount of exposure that NASDAQ has over these crypto exchanges, it's insane. Justin Sun's Tron is going public.
How does a blockchain go public? The Tron blockchain is not really going public, but there is a reverse merger with a company called SRM Entertainment that is listed on a NASDAQ. And essentially what's going to happen is this reverse merger will see SRM rebranded as Tron Inc. And of course, Justin Sun, founder of Tron, he's going to be serving as an advisor. But what's interesting is that this deal is being orchestrated by a boutique investment bank called Dominari Securities, linked to Donald Trump Jr. and Eric Trump. And this new company, Tron Inc., is going to purchase Tron tokens for its corporate treasury. And a lot of layers in here, lots going on, but that is the overarching story of what's happening here.
What are your thoughts on this Trump and Justin Sun collaboration that they're doing?
Many collaborations, aren't there? There are many different collaborations here, right? So let's take it back. So first of all, Justin Sun has faced SEC fraud allegations since 2023. Okay. Since then, Justin Sun has invested $30 million into World Liberty Financial, of course, Trump affiliated, and is its largest investor. And then he is also the largest holder of the Trump meme coin. And as such, he attended the pay-to-play dinner with President Trump at President Trump's golf course in Virginia in May. And then his SEC fraud allegations, the SEC has paused the investigation into his fraud allegations. So, we'll those are the facts. We'll leave the facts there up for interpretation. But now, of course, with Tron Inc. working with this Dominari Securities investment bank affiliated with Donald Trump Jr. and Eric Trump, lots of layers, really, really buddy. They seem to be. Think about it, man. Ponder that. Ponder the layers of collaboration there.
We're looking at it from two different lenses. And there's not one right or one wrong. You're just looking at it from like boots on the ground. Okay, like these two are getting together. Like I get that part. For me personally, I'm having like an aha moment because of the next story. But I want to make sure that you unpack everything that you want to unpack about this story first before I make that tie and open up a conversation with you.
Yeah, I mean, I think we can definitely talk about that. I think, yes, this story ties in with the next story in terms of the whole trend of crypto corporate treasuries. But what's very, obviously we know what strategy has been doing with the Bitcoin treasuries. We will see what 21 is doing with Jack Mallers heading out, and there are just seemingly all these companies popping up to put Bitcoin on this treasury. Now, this is the first time we're seeing one for Tron. Obviously, there's some biases there in terms of Justin being at the helm there, but now rolling into this next story with SharpLink.
It's not Bitcoin, okay?
It's not Bitcoin.
It's just like full disclosure out there for anybody that is wondering what's the comparison. The only comparison you can make here is that it's a company putting crypto on the balance sheet. It's obviously not Bitcoin, which, personally, I don't feel like it makes any sense. I mean, yeah, if you want to speculate, but this is the part that's like really getting to me, Mike. You've got Wall Street that's been, so like anti-crypto. Now they're playing the meme game more than crypto itself. We're over here talking about stable coins, and they're like, you know what? have these companies go public and have this crypto on the balance sheet. We'll get retail to FOMO in and they'll buy it. Therefore, these companies will be buying up more of that crypto. Like the way retail is getting into crypto, this cycle is going to look completely different from what we've seen in previous cycles. They're not going to be, I mean, look, I'm not saying the users on Coinbase isn't going to increase or anything like that, but the amount of exposure that NASDAQ has over these crypto exchanges, it's insane. And so now you have people being able to buy these meme stocks. That's how retail is going into crypto. Like, I believe this is what's happening. Like, we're seeing it. We see it with Solana. You know, SharpLink obviously has Ethereum. We obviously know about Bitcoin and MicroStrategy. And he's always been setting the tone, right? Even last cycle when Michael first started buying Bitcoin, next thing you know, other companies start buying Bitcoin. And then you have that snowball effect. So everyone looks at Bitcoin and looks at what Michael Saylor's doing and are thinking, okay, how do we replicate that? And now you're seeing this snowball effect. So it seems like it's not about the tech anymore. It's about these treasuries and it's about just financialization of crypto.
Yeah. Well, okay. Why don't we go over quickly the details of this SharpLink gaming, and then let's dive into there because there's a lot to unpack there. Because I've got a ton of comments and opinions there. So essentially, like you mentioned, SharpLink Gaming is this online casino marketing firm in like Minneapolis somewhere. And it's funny how it's like these companies just have like nothing to do with crypto, right? They raised earlier in June, they raised $425 million via this private investment in public equity, this PIPE method. But this was led by Consensus's Joe Lubin, you know, one of the founders of Ethereum. Last week, they acquired 176,271 ETH for $463 million. Now they are the largest publicly traded holder of Ethereum and second largest overall behind the Ethereum Foundation. Joe Lubin, like I mentioned, who did the PIPE, the investment vehicle, joined SharpLink as board. Upon the initial announcement that they're becoming a ETH treasury company, their stock soared over 400%, but has since dumped. It's about 73% last week over like confusion about whether shares were being sold, and it didn't seem like the buy was really had much impact on that stock. But kind of going back to the points that you've made about the cryptocurrency, it's crazy how the spectrum of, yeah, like you said, getting exposure to crypto has changed. In the past, it was buy Bitcoin, buy Ethereum, whether you buy that on a Coinbase or Kraken or other centralized exchange, or via a DEX or whatever it might be. That was kind of the recent, more crypto native way of doing it. Obviously, can go all the way back to buying Bitcoin on like local Bitcoins or whatever. But and then it became the ETFs, right? 2024 Bitcoin ETFs launch. Now you have Fidelity and any kind of money manager allowing their retail clients to buy to get exposure to Bitcoin through ETFs. And now you've got these public market companies who are just saying they're putting first Bitcoin on their balance sheets, and now Ethereum and Tron, and you're just getting this kind of second or third order exposure by buying these stocks. And it really goes back to, a lot of people say, I don't understand Bitcoin, I don't understand crypto, and I won't invest in things that I don't understand in. And these are even more like opaque vehicles, right? Some of the stock, some of it is just some of these companies just raising, through stock sales, equities. But Strategy now has that, I don't know, that Strike financial instrument. We're going through with this PIPE raise with SharpLink, and it's just so much money is flowing to these companies that it's just obfuscating so much of what's happening in terms of how to get exposure to crypto. And again, like how sound are these? Some of these are very kind of technical financial instruments, convoluted, that it just feels like it's just a making for a pretty bad bubble.
Yeah, and I think that proof of reserves is going to be like more important than ever as more of these companies come out and they start putting crypto on their balance sheet. But my question to you, Mike, where does it end? You look at the altcoins. Okay, so we went from Bitcoin, great. Ethereum, okay, I can kind of see that. Now you got Tron. Like, how low down the market cap are we going to go? Is Joe Schmo out of his mom's basement going to launch a publicly traded company and put, I don't know, Pepe on the balance sheet? Like, what to you will smell like, okay, this is the top?
We haven't gone that low on the CoinGecko market cap rankings, right? Like Tron is top 20 somewhere. Obviously Bitcoin, ETH, Solana ETFs are here, coming soon. So we're still hanging around the top 20. But I think that a lot of this is unnecessary. I think a lot of these are companies that are, not necessarily making a splash with their own products. And they are, again, some of them I don't even know what products they're building, and they're trying to take advantage of just this wave and this interest of institutional money coming into crypto.
Besides Strategy, maybe 21 by Jack Mahler, it's hard to comprehend that any of these companies will be here long term. But for an everyday retail user that maybe has Solana, has Tron, they're looking at it as, well, now I can own that same asset indirectly, make much more gains. So
but what's interesting with that
appeal short term.
But even with that, like if you look at what's happening with Strategy and Metaplanet and all the Bitcoin that Saylor's buying, the price isn't really moving up that much. Like, you would think that
but the stocks is what I'm saying.
That's the weird thing, yeah. Right? That's the strange thing. It's like, why that's not translating to the actual gains in the underlying asset. So someone must be kind of.
It's because, Mike, I'm wondering if it's because maybe the market cap of Metaplanet is much lower than the market cap of Bitcoin. This would be a really good question for Richard Byworth, who has come on the show. He's interviewed Metaplanet before. This guy understands putting crypto on the balance sheet. And by crypto, I specifically mean Bitcoin. So
yeah, someone's got to be counter trading Saylor, right? Because the man is buying up so much Bitcoin, yet it is just making like minute impact on the price. So yeah, there are people smarter than me that understand the mechanics behind that. We talk about this stuff because it is these are the largest stories in the space. I just don't want it to overshadow a lot of kind of the crypto native things going on, the really important stories of the products that are being built and really the innovation that's happening.
And we'll get to that. As always, you bring 3 projects that have secured pretty sizable funding, and we'll get to those in a little bit. But while we're talking about institutions buying and ETFs and Trump, he always seems to be in the news. Trump makes over $57 million from WLFI sales. Truth Social files for Bitcoin and Ethereum combo ETF and more. Yeah. Trump said it again. I mean, it's not like huge news. I mean, does the ETF application really surprise anybody at this point? I don't know. But what's your biggest takeaway from this story, Mike?
Just, I've said this so many times before. We do not need a crypto entrepreneur. we need a crypto president. We already talked about just how much money he's printing from, World Liberty Financial and the Trump meme coin, hundreds of millions in fees, and according to this recent filing, over $57 million from token sales. Yeah, Truth Social getting in there. I think this is their second. Yeah, like I said, this is a second crypto ETF application. I think that they filed for a Bitcoin only one before. Just again, it clouds the fact that are these loosening of regulations, are they being done for the right reasons? Are they being done because it's what's really the president thinks is good for the industry, or the president think it's good for himself?
Probably a combination of both.
Right? Oh my
There's
God!
Probably
I don't know.
A personal motive there as well. The same way, like, why would you own real estate? Why would you own these buildings? You're not creating a nonprofit organization so that way companies can rent them out from you. We'll have to digest the full cycle to really be able to go back, and maybe we can spend an episode talking about this. Have one episode where we talk about the main events that happened, how it all went down, and ultimately what was that one thing that drove it down, which I hope it doesn't happen, but looking at the previous cycles, it always seems to happen in some way, shape, or form. Yep. Next, Mike, let's talk about something that may not necessarily impact Trump. So Paradigm files amicus brief supporting Roman Storm. This has to do with Tornado Cash, right?
Yeah. So Roman Storm is one of the founders of Tornado Cash, and he's got his trial is set for July 14th, so just under a month from today. And this is a super important trial, right? So essentially, the Southern District of New York has they're the prosecution. They claim that creating software enabling peer-to-peer crypto transactions constitutes money transmitting, and Paradigm argues, against that, right? They argue that software developers who publish code without custody or control over users' funds are not money transmitters, and this is the whole thing, is right. Tornado Cash it's a protocol that allows for private transactions, and there are obviously a lot of money launderers do use it, but privacy is a human right, and Tornado Cash is in the middle of all of this, right? So this is kind of like always the ongoing debate of people who develop software platforms. Are they responsible for what happens on their software platform, or is it just a neutral platform? So it goes back to social media. Are you responsible for evil posts or hateful posts on your platform? So why is this so important, right? This could really set a precedence on any developer developing open source software. Are they going to be held responsible for the transactions that take place on their software, or specifically in blockchain, or the applications that are built on top of their software, or can they remain a neutral party? And so also Roman Storm is currently crowdfunding for legal support for this. So yeah, definitely that's been making its rounds on crypto Twitter. So yeah, really interesting, super important lawsuit for both crypto as well as overall software development. But kind of what we tie into the Trump thing, where I'm curious to see what his approach to this will be, because obviously he has loosened regulations, he has dropped some investigations from the SEC, he has made a bunch of pardons to people in the crypto space. But he would not benefit from getting involved in this at all, right? Tornado Cash, he's not used Tornado Cash as far as we know. It doesn't, he will not gain. We talked about all of his activity in crypto is so much for personal gain. He will not gain anything from supporting Roman Storm or pushing for the SDNY to drop drop this case. So I'm curious to see, like, is he going to do anything on this, right? Because this is a case that like crypto natives are tracking closely because it's so important to the industry.
But what about, say, Ross Ulbricht? He pardoned him. What was Trump trying to gain from that?
That's a good point, right? And I think that I think he should take a similar approach to Roman Storm, right?
Well, yeah,
and let's
I
see,
agree.
right? Because that's a pretty good parallel. You bring a good point. I think a lot of what that was something that I think crypto voters, because that's been he's been jailed Ross has been jailed for a very long time, and a lot of crypto voters kind of pushed for that earlier, like even before the election. So I think that was kind of a hot button issue. And I'm not saying that was like a massive issue that got him elected, but like support of that, because Ross has been such a kind of central character of the biases against the crypto industry. I think this is a similar case, right? This is a similar case where,
yeah, I was going to say, Mike, also, I think there were others that maybe didn't make as much of a splash in the headlines, but you've got Arthur Hayes, who is the co-founder of BitMEX. I think same thing with him, because he's like somewhere in China and Japan, and he doesn't want to come back to the States, but now he can. And in regards to Tornado Cash and Roman, personally, I think that this story will be a positive one when it's all said and done. So
you think the that in some form or fashion that he will be let off charges, and charges will get dropped, or he'll win the case, or some positive outcome for him and the industry?
I think so, because Trump is also, I get the feeling that he's almost like a people pleaser. Like, he wants to continue pleasing the crypto community. And so as long as he is in office, yeah, I think that can happen for sure. All right.
Okay. We'd like to see it, because I think beyond that, beyond the story of whether Trump gets involved, this is extremely important for software development in general, for human rights, with the human right to privacy, and of course for the crypto community. So I think this is of utmost importance, and would love to see the right thing being done.
For sure. Moving on, Mike, let's talk about some of these projects that are securing some sizable checks. And Hyperliquid in general has been silently doing really well. I say silently because obviously right now altcoin market is inexistent. It's Bitcoin and pretty much nothing else. If there's like one small glimmer of positivity or optimism, it's probably within Hyperliquid, which bursted onto the scene. Their UX, they've really solved that problem in crypto, I feel like, or should say are leading the way when it comes to UX. And there's a lot of volume happening on Hyperliquid, but this project specifically is the Shield exchange on Hyperliquid. Silhouette, what does that even mean?
Yeah, so coming off the last thing we talk about is privacy. Silhouette is what's known as a Shield exchange, provides privacy preserving DeFi trading by shielding user strategies from exposure and front running. And like you mentioned, Hyperliquid has been just the darling of crypto for a while, and there's a lot of things on that they've done really well. Like you said, UX. They didn't raise from any VCs. The founders were lucky enough to be able to fund their own development. This is one of the few token launches in the last few months that have gone well. Many of the ones have gone very, very poorly. Teams are building on it. I think overall that the ecosystem has a really really bright future because they've done things the right way.
Yeah, so this is pretty cool to see funding go into development, but then also security. I don't know if this is going to be like a promising project or anything, but I like what they stand for, which is secure, scalable, and programmable crypto wallet infrastructure. What can you tell us about Turnkey?
Yeah, so Turnkey's been around for a while, and they've had great traction. So their traction obviously led to this $30 million raise, Series B round. Um, Bain Capital Crypto, Sequoia, Lightspeed Faction, and then the household names in crypto and overall VC. So yeah, they provide this secure, flexible, scalable wallet infrastructure, enabling developers to create wallets, sign transactions, automate on-chain actions. And we're seeing this space. We always talk about wallets being the gateway into crypto. This is like the back end infrastructure. You saw Privy get acquired by Stripe recently. Stripe making big moves and big acquisitions into crypto. So this is definitely this wallet infra and this is more kind of B2B wallet infra. So their Turnkey has already supported over 50 million wallets created, and these funds, this 30 million, will be used to grow even faster and get even more adoption. So yeah, definitely, we usually when we talk about wallets, we're talking about kind of the consumer facing wallets like MetaMask and Phantom and Kepler for Cosmos and whatever you might have it. But this is going to go in B2B. This is the infrastructure behind creating wallets, and we're talking about now that we're talking about account abstraction, chain abstraction. It is the wallets behind the infrastructure behind the wallets that are going to get automatically created with an email login, for instance, to really onboard the UX and improve the UX.
Social engineering and just OPSEC has been a problem. It's a growing problem in crypto. The vulnerabilities, or I should say the exploits around smart contracts, they're starting to decrease. What's increasing is the risk around private key management. And so it will be interesting to see their take on the security aspect. Hard to nail down both security and like user experience and development, but hopefully Turnkey is on its way to doing that.
You've always got the ability to get tricked or to get bribed or whatnot. So yeah, that's always going to be a lingering concern.
Yep. No, I literally mean yup.
Yep.
That's the next one on the list today, Mike. What can you tell us about yup.ai?
Yeah, very cool. So this is a AI model and discovery and comparison platform. Yup, they raised $33 million in a seed round, massive seed round, led by A16Z Crypto. So Yup has this human element to it where it lets users compare answers from the leading AI models such as ChatGPT, Claude, Gemini, rewards them with crypto incentives for providing feedback and helping to improve model evaluation. So I love this. It's like we're using all these AI tools. How can and we're always talking about how like these things could be improved. We're making these comparisons, and this is a way to dedicate that effort and make some money from it. And I think it's you've got these kind of like centralized kind of rating. I don't want to say algorithms, but there's like there's ratings and reviews from these like companies on like the performance of all these models and how fast they are and how accurate they are and how few hallucinations we are. Like now this is coming, Yup is facilitating like this kind of like one-on-one user feedback for these models and incentivizing that. So again, it's just these the democratization and the decentralization of ways to improve AI and not just have it in the hands of these large centralized companies. So I love it.
Such a interesting episode today, Mike. We started off talking about the financialization of crypto, and we're ending it with technology, just full on like flex in terms of what blockchain technology is capable of. So great episode. And for those that are watching, if you found this video informative, if you enjoyed it, share it with your friends, like the video, give us a comment, and also give Mike a follow. He's on X and he's got a great newsletter. Until next time.